Hey, good morning, everybody. Welcome back to Schwab Coaching. It's our Thursday edition of Trader Talk in today's market. I am your host, Kevin Horner, joining you from Denver, Colorado, of course. Today, pleased to be joined by my friend and fellow coach, Brent Moores, over there in the chat. So I'll be here managing things solo, but Brent will be there to answer questions, take care of things that I'm unable to get to for you here live and in the moment. But please feel free to post in the chat there for the duration of the segment. About 45 minutes will go in total for you today. But ultimately, want to get to as many of your questions as possible today, being that I am here solo with you all. So please feel free to get those in. I got to be honest, everybody, having a bit of a day myself this Thursday. It is the 27th of March today. It is my oldest's 18th birthday. Having a little bit of a crisis this morning myself as I come to grips with the process of raising children and having them reach milestones. So happy birthday to my oldest today. But we today are going to work through, of course, the standard market approach that we do. We're going to hit up the major indices for you, of course, get into some sector action, industry groups, and a lot of stocks in the news today. But I also, on this solo day, want to be sure that we hit our example portfolio for you. Have a couple of positions in there and want to make an adjustment to at least one of them, I think, and then potentially building a new trade for us to kind of cover some of the things that are in the news a little bit today. So again, we'll get to as much as we can for you over this very brief what will go quickly for us here, this 45 minutes. So let's get down to it, everybody. Remind you, of course, that our discussion here is exclusively informational and educational. We do not make recommendations nor endorsements for a specific approach to trading or a specific strategy to trading in the marketplace. We do talk technical analysis here. Remember that technicals are considered to be just a piece of the puzzle. We discourage you from utilizing technical analysis as the only means of your research. We think it can be a piece of that puzzle, though, everyone. So just consider as many pieces in your decision making as possible. Don't go crazy. Obviously, we want you to have a few key components to make those decisions, but ultimately, remember that we try to balance those details in our decision making process. So consider technical analysis simply one of those. Okay, beyond that, I want to mention, of course, remember options, the extent to which you are that we cover options today. Options are are going to be potentially more complex than some traders are comfortable for or familiar with. You want to familiarize yourself with the characteristics and risks of standardized options prior to requesting option approval. Now, you would do so at Schwab by applying on an account by account basis. That means some accounts can have a certain level, others can have a higher or lower level. So just bear in mind, you do need to go through that process. If you have any questions, you can always reach out and have a discussion with one of our representatives as you are working through the process of applying, if that's something you'd like to do. But of course, remember, options are not necessarily appropriate for all investors and do carry some levels of risk. But I think today we're going to try and place an example option trade in here. I'm hopeful that we have an opportunity to get to just that in our limited amount of time. All right, so there's the agenda. It's going to be standard, pretty much the same stuff as I said. The broad market will hit up the S&P, the NASDAQ 100, and the Russell 2000. We're going to look at the semis again as well. And then, of course, we got to look at some of the automakers today on the heels of the administration's announcement of 25% tariffs on automakers who do not build those vehicles and parts that are not built or created here in the U.S. as well. So with that, before we get to all of it, I'll just remind you, keep an eye on that schwab.com events page, everybody. You all know that we've got a lot of events coming up, but that page will highlight for you Detroit, Denver, Anaheim, where we are going to be over the next few months. I will be out there in Detroit in a couple of weeks. And of course, in the Denver aspect here, when we host that one for you, coming up in May, I'm definitely going to be at the Gaylord of the Rockies for that one. Would love to have you all attend. Always enjoy getting the opportunity to meet with all of you in these events. And of course, remember, schwab.com/coaching, get into the live events person page here, and then you've got your drop-down menus for each one. Click that Learn More, and you can get registered right away. All right, so let's look at what's going on this morning, everybody. We yesterday talked about the S&P 500 moving into some resistance. Always intrigues me to see those areas of potential resistance provide actual resistance for you. And boy, did it happen with yesterday's action. Now, try not to get bogged down by maybe the narrative that occurred, of course, right? We heard from midday we were going to get some discussion on tariffs. We knew we were going to hear from the administration after the market closed, and the market just and the bulls just said, okay, well, if this is what we're going to continue to deal with, it really pulled comfort from the market. And so what we had was a pretty good rejection level with yesterday's candle. We not only broke down below the low of our gap day yesterday, we tried to hang in, but you can see we've already traded through the low of yesterday. Not an ideal situation. Just be thinking about this from the standpoint of what we do want to see. In a bullish scenario, as you all know, as we are running to the upside, for example, let's just highlight this area back here where we rallied off of this support, right? This whole zone. These are just moves quickly through the highs. You keep moving through the highs and you continue to gap or make new levels. Well, that can go the exact opposite direction as we go through a pullback or breakdown. So we have to make note of the fact that we've traded already through the low of yesterday. Now, yes, it's only the first 6 minutes of the session, of course, everybody, and yet have to make note of that. That is a delicate move already. We are down to 56.80. And we are, working our way potentially lower. Let's take a look at the 5-minute bars and let's see if we can learn anything in the short run. Some of you are already positing levels you're going to keep an eye on. That's great. Have those levels. Know where you want to take action. I support that, of course. But the first thing I'm going to do is draw a trend line off of the bottom, just upward through here. So could we get a bounce at the trend line? Okay, sure, it's a possibility. The question is whether that's a legitimate bounce opportunity. What do we need to see? If we carry this into the 5-minute bars, I think a lot of traders will make note of our intra-period moving average, the 20-period moving average. That's this light blue line you see. We were below it all day yesterday. And that was kind of a little bit of a heads up as to what was potentially happening. Now, we got that little rally at the close. I would call that a bit of short covering or, basically traders who were bearish yesterday taking their profits off the table. Now we've seen today's move around the pivot point up here at 57.30 already. Now, we didn't gap our support level down here, so we didn't trade beneath it on the open. So I guess we could say, all right, at least it didn't do that. So we could be a little bit of optimistic here, I suppose. But we would need to bounce off of S1 here at 56.76 pretty darn quickly. So what are you looking for if it is going to be a bounce? Well, we're looking at 5-minute bars here. So I'm just going to give you a brief example of how someone who might be utilizing a 5-minute bar on an intraday chart on the SPX like this would use or consider support as it relates to this S1 first area, the first green line. So if this is validated as support, the thing you want to see is over the next 3 5-minute bars that you get an opportunity trading above one of these low bars. So you basically want to see that we don't go lower, that our next 3 5-minute blocks are on or above 56.76. And then once we start to move off of it, obviously the hope being to the upside, if this bar is the low bar here, then we just want to trade through the bar's high, 56.85 or 56.86, and that would maybe give traders some confidence. But that means that if you're wanting to be bullish, at this moment, a lot of traders simply are sitting on their hands and waiting for confirmation. If you're working on this as a 5-minute bar trader, you don't really have a lot of option here, but to get some additional data points. And that only comes from another 5 minutes passing. So just keep that in mind as you're watching 5-minute bars, or maybe if you utilize 15-minute bars, the concept can remain the same. It all just coincides with your preference of time frame and which window of time you like to work with in terms of your candle lengths, excuse me. All right, so watch that 56.75, 56.76 today. Hopefully we're going to hold up there, but obviously the risk that we've learned over the last day and a half here is reminding us that there's plenty of uncertainty in the market and we have a lot to figure out. Okay, so let's migrate on over to the NASDAQ 100. And it's going to look very similar, everybody. My downtrend line really is more of a line to define the distance. We fell about 14% peak to trough at this point. Now we have unfortunately moved through yet again that low from yesterday that we created. Everything I said about yesterday's action relative to the S&P 500 appears to stay valid here. The biggest difference that we've rallied into the 200-day instead of through it with the SPX, but who cares if you went through it for a day and a half or not? It at this point looks like a rejection at the 200 for both the S&P and the NASDAQ 100. So perhaps some of you traders are building cash. I see James is mentioning cash is king. Maybe for the year is James's comment, but really what matters is your comfort. Where do you want to deploy funds and how much of your funds do you want to have liquid for such opportunity in the midst of all of this, the rhetoric we get on a day-to-day basis and all of the market machinations we're getting as a result of said rhetoric. So if you're uncomfortable, it's okay to be a bit more in cash. It's okay to be utilizing smaller position sizes. Put yourself in a comfortable position, whatever that is for you. Don't allow somebody else to define your comfort. You have to do that for yourself. So please, very, very important. Please keep that in mind. Let's look at the 5-minute bars here. Okay, very similar, right? We didn't gap lower. We moved lower, gapped lower, yes, but we didn't gap a support level. And here we are just dabbling at the S1 ledge. Hopefully we can get a bounce here in the NASDAQ 100 as well. All right, how about those small caps, everybody? Well, yesterday, Ben and I were talking about the potential for a bear flag development. I drew in the bear flag, and now you can see that today's new move is trading through the uptrend line off of those lows. That is possibly notable, everyone. And so in such a break, if we were to close like it appears at this moment, many traders would tell you expectation is for a test of that green line around 2000 on the Russell. Now, that doesn't mean it has to hold up there, of course. I will point out that when we made that last low here, we also made a dramatic oversold low in the RSI, down to under 24. So weakness is pervasive here in the small caps and the Russell 2000. And a lot of that likely tied to the talk of potential recession, of course. So it is a difficult window of time. And we know that this is not really a surprise, but that doesn't mean it's fun. So again, if you are maintaining small cap investments and you continue to deal with the struggle, have some understanding of where you will make a change. For a lot of traders, everyone, it might not be the next 60 points if it goes to the downside from where we are around 2060 down to 2000. It might not be that move. But if we started to move under 2000, some of you are going to, in small cap positions, probably reaching a point of discomfort you don't want to be in. So be thoughtful, know how you want to act, and give yourself those steps, right? I call it the playbook for a good reason, right? If you have the playbook and you know it's third and long, and this is the position in the game, we are up by this much or down by this much, and the game's been working this way, but man, I really have that one play that will work. If you are prepared when that instance occurs, well, you are increasing your likelihood of a successful opportunity. It doesn't mean it's going to work, but it does mean that you're increasing your likelihood. And I'll remind you, that's what we talk about, probabilities. We don't talk about certainties in the market. Those are very, very hard to find. And the ones you do find don't generally offer the return that you're striving for, right? So probabilities are what we look for, and we always recognize that we are simply looking at a more likely now based on this, less likely now based on this approach. So define those things for yourself. It'll be a little bit easier when the decisions are needed to be made. Okay, so there's a quick look, everybody. S&P 500, NASDAQ 100, Russell 2000. We're going to kick it on over to the semis. Real quickly, I just realized I forgot to, a little self-serving here, but I forgot to remind you to follow me and Brent on X. So please do that if you're not already doing so. Brent and I try to post for you there throughout the week, give you some things to bear in mind and be aware of. So I'd love to have your follow there, everybody. Let's peek in on our semis. If you've been watching this show, you know we've talked about the struggle, and boy, it looks like the last 3 days tells us that we are not yet ready to reassert any kind of an uptrend. We've gone pretty choppy here in the semiconductors for a while, haven't we? And the most recent action looks like another rejection in the vicinity of that 20-day moving average. If I zoom in here, everybody, I imagine some of you are going to mention the fact that the Horner rule might have kept you, the so-called Horner rule might have kept you out of trouble here with the rally through the 20-day moving average. Reminder, the Horner rule is merely an encouragement to define your level of confirmation. What is confirmation for you? Some traders want to see that if we break out of an area, we accomplish a retracement taking in the 20-day moving average like we did here. We were above it for 2 days. Okay, if you said 2 days above a moving average that has been had been resistance, if I get 2 days above it, that's going to be confirmation for me. You might have gone long on this day or the morning after and said, I'm comfy, I'm cool. Now, if you were a day 3 trader who said, I want 3 days above what was resistance in order for that to now be support, well, you didn't get it because yesterday's close broke down aggressively. Now you had 2 days above the 20-day in a row. And now we're right back below it. Okay. Now, again, I'm not telling you 3 days is right. What I'm telling you is for some traders, it's 3 days. For some traders, it's 1. For some traders, confirmation might be 4 or 5, or it could be 3 days above. And I want to see an increase to volume, for example. Have those details laid out. Know what it is that's going to give you the impetus to place a trade or to either put more money on the table or to start retracting or pulling that money off, right? Give yourself those steps, everybody. Okay, let's see. So we're watching here the green line, hopefully not going to get down there. I see we've had a little bit of a bounce. I say a little bit because if I kick it back over to the S&P and you see there's a little bit of a tail there. My line is probably distorting it. There you go, a little bit of a tail, right? Now, let's check that 5. Okay, see, here we go. Right on that S1 level. So here we are trying to figure things out. We have a low bar, and we are trying now to trade above the high of the low bar. Now, we have not closed that bar. We are still in that 5-minute bar. It's building. And in 2 minutes, we're going to have a new bar. So what happens here over the next 2 minutes for very short-term traders could be a little bit indicative. Bear that in mind. If it's going to be another rangy downside day, if that is the case, then the likelihood would be that we remain below that 20-period exponential moving average on this 5-minute bar. Now, that's what some traders are watching. I'll remind you that's a very short-term time frame, though, and it might not be ideal for all traders, of course, but it does give some of us something to keep an eye on for the short term here, and it could give implications for a longer term move as well. Okay, all right. So let us see. Let's take a look at a couple of the stocks that I wanted to bring into the discussion today. So first of all, I thought we could look at a couple of positions that are in the news. We're going to follow up with a couple of those automakers here in just a moment, but I wanted to look at a couple that are being upgraded today. So the first one is Northrop Grumman, NOC, in the defense space, of course. So NOC has had a pretty good run here. I mean, when I say a good run off of the lows we see here, and we have recently, with today's move, taken out a pretty good and interesting level here, right? I'll put that as hopefully this is going to stay support. So let's make it green. Why not? All right. So what do we have working out here? Well, the news today, RBC Capital upgrading Northrop Grumman to outperform previously had been at sector perform. New price target kicked up from 500 to 575. So representative of from this price, about 60 points of upside, a little better than 10%. So that's why you're getting the lift you're seeing here today. Now, from the standpoint of the chart, many traders might tell you that they are seeing a bit of a cup and handle, a very deep cup. And then the handle is right in here, right? So something like this. And then, so the action we got here on Monday was the theoretical break of the handle portion of your cup. But to take out the highs as we are today could be a trade opportunity for some new to the position bullish traders. Now, why do I say it like that, everyone? Well, when I say new to the position, the idea is establishing proper risk versus reward, right? So on a breakout move, the belief or the hope is that you're not going to get kicked back below the breakout level. You can manage if we get kicked back after a little bit of a run to test the green line, which is to say, price action trading down to and maybe through it intraday, but closing on or above it would look like a potential successful test of support. But what this type of move might imply for some traders is the opportunity to put on a new position, put a stop nice and tight, meaning really close to the recent price action, as a means of just admitting, look, if this were to trade back below the low, for example, that we made yesterday, well, then that could look quite a bit different all of a sudden, and maybe a trader doesn't want to stick with the position that way. So some of us might look at it and say, yeah, I'll put a stop under the low we made yesterday, which means somewhere in the neighborhood of 8 or 9 points of risk relative to where we're trading right now. So 505 is like an exit strategy for some of us. In the short run, that would be about 8.5 points away. If that's the case, then of course, what are we looking for? Hopefully more than 20 of upside opportunity there. And if we, did this based on a couple of factors, you could utilize the price target that's offered by RBC, for example. By no means is that a guarantee to be achieved. We know how fluid price targets are. We could also do a measured move calculation based on the height or the depth, rather, of the cup we've built here. That's one way to look at it. Now, that's going to be aggressive because the cup is pretty deep, everyone. The peak of our cup was, let's just do this for ease. Let's call it 510. All right, so it's going to be pretty close to 510. And then our low, let's call that about 425. All right, so that's 85 points of depth to our cup. So if that is in fact going to play out in a favorable fashion, bulls would suggest that you could add that 85 points to the breakout at 510 or 508-ish, and suddenly you're looking at somewhere in the neighborhood of 595 to 600 as a potential measured move target. I'll remind you, measured move targets are merely estimations. We never assume they get there, but it's a way that some traders will look to target upside opportunities. Now, we don't know if that's going to play out in our favor. Lots of uncertainty, of course. That said, I thought it was an interesting chart with a positive upgrade notification today. I do want to give you the other context from RBC. So I'll give you what they tell us here in the note. The firm believes the positive shift in Northrop's sentiment has, quote, significant room to run, end quote, as the company is well positioned relative to shifting Department of Defense priorities, and execution on the B-21 remains strong. So RBC seems to be relatively bullish on this, and a new price target, as I said, up to 575. So that's what I wanted to cover as it relates to Northrop today. Now, we're going to unfortunately have to talk about one that isn't going to look nearly as good, but it's a little bit fun, if only because I brought this one up recently, posted this on X for you all as well, and unfortunately, that's Advanced Micro. So we're going to talk about AMD today. Jefferies downgrading AMD to hold from buy. Put up new price target here at 120. That's a 15-point reduction from 135. The firm cites the company's limited traction in AI, its belief of street estimates being far too high, according to Jefferies, and expectations of mounting competition from Intel are all reasons cited for the downgrade here. So we have looked at Intel recently. We've seen some improvement. When I brought this one up on X, what I was referring to was the consistency of the 20-day moving average acting as resistance. The 2 days above the 20-day, 2 days above the 20-day, 2 days, maybe a third before a gap move. Lots of tails at the 20-day. We finally recaptured it here, and the chart is starting to look a little different. And I bring this up for a couple of reasons. Number one, yes, we have what appears to be a bit of an island here now. So if I highlight this, you'll see, yeah, we've got this little spot, right? A gap now that could act as short run resistance. It also happens to be at that 50-day moving average. Now, things appear to be improving for AMD because while we got rejected at the 50-day, we are still above the 20-day. And for some traders, it's quite notable that we're above it now back to the 17th, right? So some traders will use the 20-day for new support. Some will use the gap low, essentially, at around 102 for new support. So this is just another way to be thoughtful. But one reminder about using something like we just heard from Jefferies is a downgrade on AMD, and still seeing that the stock is now not getting killed in price action, that could be a positive. So it doesn't mean that everything's A-okay, but some traders will take the heads up that price action is holding and we're not dramatically moving to the downside. We've not taken out the 20-day again yet. They might start thinking, well, here we have bad news day and AMD is reacting a little differently. Yes, it opened weak. Yes, we're down 2.5%. But if the 20-day is going to be supportive going forward and AMD starts to act bullishly on bad news, well, that's a shift in what's been happening. And it could be that something is developing under the surface and we may be seeing some improvements. But in order for that to be the case, we got to get back above the 50-day. We got to hold the 50-day as support. So short term, a lot of traders are going to look at the 50 as resistance. You get back above it and you can call it support again. Everything maybe can change. All right. So that's an interesting look at things on AMD because that's for so long. And I say, really back to October, while everything else has been in rally mode, AMD has not. So certainly needs to get itself in gear, but a little bit of a change underway as we speak. Okay, let's see. Yeah, you know what? Some of you wanted to make note of the VIX drop. Yeah, because it had been a bit elevated here off the open. So yeah, it looked like we may be underway getting a bounce, and we were potentially going to see that volatility persist today. But right now, at least, it has pulled back, itself has pulled back from R1. Now, the key in terms of watching the S&P get back into rally mode or bounce mode, more importantly, is to see the VIX continue to slip. You'll want to see the VIX back probably under this pivot level around 18. VIX back under 18 would be optimistic and potentially, for today at least, opportunistic perhaps for S&P 500 specific traders and investors. So that bears watching, yes. You'll notice, we came right off that S1, didn't we, everybody? Right off of it. And for very short-term traders, again, this bar was perhaps your first signal that you had a short-term opportunity. But again, it's very short-term. I mean, I'll just remind you, if you decided to buy based on this candle, maybe you get in at 56.87 and then you thought we could get to the 20-period EMA, that's 5,700. It's about 12 to 13 points. Well, now we're pushing through, and that might have been a nice opportunity, very short run here. But let's see how we act at that 20-period exponential moving average that some short-term traders will work with. This might be the short-term opportunity to push into the pivot at 57.30 today. That would be a pretty strong intraday move off of S1. That would represent about a 50-point SPX pop if we could get back up to the pivot. Now, that doesn't mean that turns the day to bullishness, really, because that pivot, again, is reflective of yesterday's price action. That is the equilibrium price around which we expect action to reside today. So trading above it would be bullish. Running into it as resistance could be problematic. Okay, so some reminders there as well. Okay, now I mentioned the auto tariffs. So let me pull up just a little bit of detail on that. We do know that it's the president announcing plans to add that 25% tariff on auto imports and suggested further duties on both the EU and Canada, both. And that's kind of like, led to a little consternation. Now, the two positions that had the biggest moves on this headline were Ford and General Motors. So I thought we could look quickly at what's going on with Ford. I'm going to clear my draw set here. So Ford certainly been in a bit of a downtrend, recent uptrend, yes, but has run itself into a zone of potential resistance here. As you can see, we've been to this level before. And you could also make note of the fact that the RSI has been to this level before, and it's been a rollover spot, a spot where the RSI has turned back. So we're getting some improvement, but limited in scope. So Ford looks a little bit different than, say, General Motors. Let's pull that one up for you. GM today, with that bear engulfer perhaps yesterday on this news, you can see got thrown back pretty well. Now, if you are looking at this as optimistic for this, for General Motors, for example, maybe the level from which or the level to which we dropped today is a spot for short-term traders for consideration. Now, if that assumes you have to assume bullishness, of course. If you're sitting down here and saying, well, that's what that white line represents, let's make it a green line so we can define that as potential support. And then again, technical analysis stuff. Let me just bring this out so you can see once more 3 days above the breakdown or the downtrend line. So that started to look really good and then got thrown back aggressively. So what do we want to see? We want to get right back above the confluence of all of that data. The 20, the 50, the 200-day moving average are very tight on top of each other right there, right? So that's our near-term, short-term area of resistance right around 49. It is likely to be a very important area. And when I say that, think about why. It is the combination of 3 different moving averages for 3 different windows of time. The 20-day trader, the 50-day trader, the 200-day trader, all evaluating $49 or so as the most important price level to get through. Now, certainly doesn't mean we have to pop through there, but if we can get back above the white line, well, now we've got a potential for a more bullish scenario, more bullish opportunity. So I thought what we could do here is looking at GM, being that we are near or at support, have tested an area of support. Of course, we're only going to be talking about this from an example opportunity. I'm definitely not telling you that General Motors is going to hold that $46 low. I don't know. But if you were feeling bullish, we can do an example trade utilizing options here, building a bull call spread scenario that would allow the trader the upside opportunity, and by spreading it off, as we call it, essentially owning a long call at a near strike and selling a call at a higher strike, that allows the trader to define their risk up front. They'll know their max loss opportunity, max gain opportunity as well. So a lot of traders who are new to options like this defined risk process, knowing upfront, this is the best case, this is the worst case, assuming I hold it to expiration Friday and I let everything go the way that it's going to go, then I know upfront how this is going to play out, right? And a lot of traders take comfort knowing those best case, worst case numbers. So let's talk about it from that standpoint briefly. We have $46 as potential support, right? So let's make note of that. And, oh, that is tiny. Let me fix that for you. There we go. All right, 46. So now we have, like we said, about that upside around 49. If you were feeling bullish, well, then you're thinking it's going to get its way through 49 and can get up perhaps into maybe that 50 level, right? So this could be a really tight spread, for example, and it could also be less tight. I mean, you could absolutely go with something that has more opportunity, but I'll remind you that we often take stairs up, right? So it takes a little time to make our upside moves, and then sometimes doesn't take nearly that long, obviously, to make our downside moves. But if the trader thought we had the opportunity to get up to 50 and thought we could be there by next week, well, maybe the trade is something as maybe a $46 long call and then selling a $50 call against it. So essentially saying, hey, we've got an opportunity to make 4 points of upside less what it costs to put the trade on. Okay, so let's look at it like that. Let's see if the numbers will give us anything to work with. We'll move on over to the trade tab. I was thinking of next week, of course, with only 1 day to go here. So give us a little bit more time. Certainly could even go further than that. And, again, the nice thing is if we do go a little bit further out, you're going to get a little bit more premium as you look to something like those 80 contracts, which are bid at 54 by 80 cents. So let's just go through the theory here real quick. If we wanted to be a buyer at 46 call, that's not terrible for some traders simply because you're buying it essentially a stock that's already in the money, which gives you a little bit more confidence potentially that the opportunity is that this contract will be in the money at expiration. In fact, that's what this column is, probability of in the money at expiration at 63% here, according to the calculation. So you can be a buyer of one contract for $270. Now we can reduce that cost by selling that 50 call down below. Okay, so something like that. So this is where we get into that understanding the opportunity from a standpoint simply of capping our upside at 50 and our entrance at the 46 call at $2.70. So we would be essentially just reducing our cost by somewhere in the neighborhood of 65 cents or so based on the bid versus the ask. So if we wanted to, I could just hold that control button down and hit the bid, and you'll see that it populates down below. So I have a GM 46 call long, selling the GM 50 call, same strike. And if the stock closes on expiration Friday at $50.01, well, then we make on this trade the difference between our strikes, $4, less what it costs us to put on the trade, $1.80 approximately, right? So we would walk away potentially looking at $220 of profit for a $180 investment. And your worst case scenario, or rather your max loss on the trade, becomes the amount that you spent on the trade. Now, the only fly in the ointment, so to speak, is if you're leaning bullishly, yes, you've reduced the cost of this position, but you've also capped your upside. So if the stock moved aggressively through 50 and just started to crush higher, well, you're not capturing any of that additional upside over $50 a share. Okay? So that's our example on the GM. Let's go ahead and place it. And I didn't do anything on price, so I'm just going with the essentially in between. So we'll take the so-called market on that essentially. Hit confirm and send, read through. There's your break-even details. There's your max profit, 226, max loss, 174. Go ahead and send that off. And then we are going to likely get execution here momentarily. Now, I'm going to sling on over to my monitor page here. I mentioned pre-show that I wanted to take a look at some of these trades that we've got on. We had previously talked about Intel, and I've got a spread working here. This is a call vertical, much like the General Motors one. One long call, one short call. So a $5 spread that has really not been working here. Let's look at Intel and see quickly why. Because essentially, since we put that trade on, well, we've just kind of gone sideways. We didn't get the breakout. We were talking about the potential to get this through the white line up here, that we've gone really sideways, as you can see dating back to the August window of last year. So absolutely would prefer to get through that. But at this point, not a lot of changes that need to be made on the Intel position, simply because, again, defined risk strategy. We know our max loss, our max gain. We can simply hold this one through expiration. So no reason to make any alterations to the Intel position here. Let's look at the JD.com position, though, the long a position of shares. Underlying stock getting a nice move today, putting us back in profit. So let's take a look at JD. I do have a bracket on that one, as you'll see. There we are. So here's our bracket, of course, everybody. I've got a stop down here at 37 and change, 36.97. And then we've got our upside sell limit at 60. So quite a ways off. Do we need to make an adjustment here, everybody? Some of you would say yes, right? Some of you would say we want to go ahead and get that stop order perhaps raised to under that 50-day moving average. And I could understand that. Let's just quickly look at this trade. When did I put this on? Okay, so right back here is where we put it on. Notice how close my stop is here. But since then, we've had a wonderful move, and the 50-day moving average has climbed with the price action. So that means that if we believe in the 50-day moving average as support, well, we could potentially put our stop order beneath that and feel okay about not making an exit unless we made a lower low. We might want to look at something like this called out low here, right? Around 39.60. But that's 5 points up, everybody. And we have 285 shares. So you know what? That's a fair bit to work with here, meaning we are looking to raise our stop so that we reduce the risk. I'll remind you, of course, that when we raise that stop, it doesn't mean that we're going to get stopped out at the right price or the price that we designate with our stop order, because it triggers and becomes a market order. But that's a big shift. You know, moving your stop up 4 points means that you are trying to limit your loss opportunity by now less than $1,000. Look at that. Great. We got hit on that vertical General Motors option trade. So terrific. Let's go ahead and raise this stop. I'm just going to hit send on that. So again, remember, triggers with a stop order trigger and become market orders. Therefore, we cannot suggest any price at all. Of course, market means the next available price, unfortunately. So just keep that in mind, everybody. So there's a JD.com adjustment. Hopefully that'll keep running for us. And for some of you, you know what? If you could see this one trading over 46, maybe that gives the opportunity for traders to potentially add to the trade if it can get itself through about 46 or so. So some bullish traders might be looking at a continuation move potentially there in JD. Man, lots of conversation in here. All right, so I just wanted to run real quickly through this. Let's see. Yeah, a lot of you are pointing out, you know what, no matter what trades we put on, opportunity exists to get smacked. Hey, this market is difficult. Yeah, we got a lot of back and forth. We got a lot of whipsaw action based, if nothing else, on headlines. So be aware, recognize that we have plenty of risk on the table, but we do get, you get opportunities from time to time. And sometimes a trader will find a little more comfort with something like an option strategy simply because the amount of dollars deployed to take advantage of some of these moves can be greatly less, far less than what it would take, obviously, to own the underlying equity. Just another reason that options might be appropriate. And so if what we covered today, everybody, was different, and certainly different relative to what we do here in Trader Talk frequently, I know that. But if you've got anything from it, you learned something, or maybe you say, hey, that was great, Kev, but I can't see why this would help me, or I don't have the comfort. Remember, that's exactly why we are here, everybody. That's what this channel is all about, giving you the understanding necessary to be comfortable and confident in placing these trades. And of course, utilizing the Thinkorswim platform and its paper money application is a wonderful way to really break down those barriers and build a process that can work for you. So that's going to be my encouragement for you today, and I will utilize that as our wrap up. So with all that stated, please follow Brent and me on X, Brent Moores, CS, Kevin Horner, CS. Of course, check out those opportunities to meet with us live, come out to a workshop, Schwab.com/coaching, again, is where you can find all of those details. And if you like today's conversation, please hit that thumbs up button down below for me. Let me know what you thought. Some other ideas of things you'd like to see me cover. Thursdays, my solo day, are a great day for me to work around your ideas, your insights. Let me know what else we could be doing for you here. So with that, I'll thank you all for joining. Have a great Thursday, everybody. I look forward to seeing you all again real soon.